So Adam Jonas from Morgan Stanley is back at it again, this time with a new note sharing their thoughts for the fourth quarter deliveries and for the new year. So they're forecasting deliveries of 2.25 million cars for 2024, but to come with price cuts and falling margins. In addition to a discussion about BYD, the main point that Adam wanted to make was that their belief that Tesla will continue to make partnerships with world leaders to expand both gigafactories, but also to secure supplies of battery minerals. We've got Larry Goldberg with us. He's a multi-entrepreneur and love having him on the show quite regularly. Welcome, Larry.
Thanks. Great to be here, Herbert.
Thanks. So we love it when we see these notes being dropped by investment analysts. We get to know how they're thinking. Morgan Stanley, of course, has been very bullish about Tesla, but as we'll show you guys, they've got some points about falling margins and price cuts, and we'll get your opinion on that. So we've got his note that he just dropped, and this was his thoughts following the fourth quarter deliveries. So Adam Jonas. So their price target is still the same at $380. They're one of the more bullish institutional analysts out there. That's what they think. And we'll show later also how they break down this 380, how they came up with this price target. So their first point that they made is that you have to start thinking of Tesla beyond just auto. Right now, you'll see that of their $380 price target, they give about 23% of that price target through discounted cash flow valuation is based on the auto. It clearly is important. It's the thing that dominates, as they say. We see autos as a highly challenging core market. It serves as an accelerator laboratory, though, for all the critical technology that Tesla's working on: software, hardware, compute, communication, supply chain. So, yes, the stock will be increasingly be driven by other factors. So at least they understand that. Let me pause here, Larry. What do you think?
So this is so important. Adam Jonas is giving us this theme of some of the parts evaluation of Tesla. And this is not new. I mean, Dan Ives has been talking about the sum of the parts for some time. The key is that people make the mistake of thinking of and talking of Tesla as an auto company. So many analysts say, well, auto companies really don't have this kind of multiple because of these challenges in the auto industry. What they miss is the point that Dan Ives definitely understood, and Adam is definitely getting the point now. And many or several other analysts have actually understood this in the past, and it's going to become a more broader this broad theme is going to become more understood by more and more analysts and by the market as people see some of these components begin to substantially impact both profitability and cash flow, and energy and services have really begun to do that in the past couple of quarters, and we're going to see that a lot more, and Adam is right on the money in this regard.
Yeah, isn't it great when us retail investors a year ago, we kept, saying, hey, Tesla's not an auto company, it's an energy company. Just wait till next year when the margins of energy is going to surpass Tesla, when the revenue is going to get to be meaningful, and you're going to see these sales, and then Lathrop is going to become highly scaled, and then a new megafact factory. It's all happening now. And then now you see, as you'll show here, that institutional analysts are finally catching on. So a lot of things that you're talking about 2024 or even beyond, we will see next year. This will show up in these financial analyst notes. So the next thing that Adam Jonas talks about is the leasing. And so in this, I won't read this whole thing here, but basically the gist of it is that if you look at the Tesla's fourth quarter note that they just dropped a few days ago, they point out that only 2% of the deliveries were leased by Tesla, only 2%. And if you compare it to BMW, which is covered by Morgan Stanley's European auto analyst, BMW reported in 2022, 16% of its global unit volume was leased, 16%. And so what does this mean? Why don't you explain that to us a little bit more, Larry?
Well, leasing is an opportunity to expand your TAM, because so much of the market is really geared to being able to lease a car rather than buy a car. And it's beyond just simple financing, of term over time with a deposit and so on. But leasing is an instrument used by companies, businesses for their employees, and by business people in general, people in employment who can afford a certain particular payment. So leasing is a very, very important lever in terms of sales. And Tesla hasn't really employed that lever very, I wouldn't say they haven't employed it at scale yet. And that opportunity lies. Now, they recently sold a package of some of their leases on the financial markets and turned that into cash. They could definitely double, triple, or quadruple their leasing activities and scale accordingly. And that's a lever available to them. I think Elon is very, very conservative and cautious when it comes to the financial markets. He has, a very measured approach to taking on debt. Leasing means that he would have to borrow a significant amount of money to put into these leasing agreements in advance of packaging them, selling them. And also when they sell, typically there's some sort of comeback on the company. So he's cautious about it, he's conservative about it, but the opportunity lies in, pulling that lever to expand sales. So that's kind of a reserve opportunity for them. And I think that's what is being said here in this note.
It says here, the point we're making here is that beyond various advertising initiatives at Tesla's disposal, we see significant potential for the company to leverage captive finance tools similar to much of its premium competition in years ahead. So that's a lever that they can still pull in addition to the advertising and in addition to potentially even lowering the prices as well, if they need to hit their production.
And this is very important in small business, particularly in Europe and the United States, in terms of expanding the TAM to those companies that buy cars for their employees. This is a very important financial tool.
Okay. So the next section that they talk about on their note, this is their 2024 forecast. So for 2024, they're expecting 2.25 million units, which isn't bad, right?
They're light.
Yeah, for you. But institutional analysts, we're okay. We actually, personally, right, we want these guys to be light. We want them to be low so that we can have a beat.
Absolutely.
But they do talk about they're expecting a reduction in average transaction prices, so lowered prices. Now it's only 3.7%, so it doesn't seem quite high for me. And then, of course, here's the big one though: auto gross margins. They expect it to decline to 12.9% from its 17.2%. So that's a big deal. Operating margins to 6.4% versus what it was at 8.9%. So, that's quite a bit of reduction.
So Firstly, what I think they're light in terms of their sales, and you're correct. I think they are being conservative, and I think that's a good thing. Their margin reduction, I'm kind of aligned with that. I think that we're going to see quite a degree of reduction in margin from one simple perspective. Right now, Tesla does not have the next gen vehicle on the road. They're going to have to stretch the TAM of what are premium vehicles to expand them into lower rungs in the market, and that means lower prices. So there's a combination of factors, and the one is the kind of the limits of government programs to support the purchase of non-gas vehicles. So that's going to have an impact. Just expanding the TAM is going to have an impact. And so I think we're going to see a collapse, not a collapse, but a reduction in operating margin. And I think he's correct in that. Now, there are offsets in Tesla are going to be expanding margins in energy and expanding margins in services. But on balance, I don't think he's wrong.
Okay. Well, that would be very interesting to find out what's going to happen here. A reduction in auto gross margin. This point, there's a few of you like you saying that there's going to be reduction. There's actually people like Jeff Lutz who does not see a reduction in auto gross margins next year. So this would be one to watch.
And he's not wrong. I mean, he has a real insight into the supply chain. I think he sees the opportunity for reductions. I'm a little bit more cautious on that note because, we've got a war going on in Europe. We've got a war going on in the Middle East. We may see disruption to the supply chain yet again. I'm a little cautious about that, but Jeff has, deep insight into these areas. So I think that's definitely an offset.
Okay. So the next section here is they spent a whole bit on their note on BYD. So it's interesting that they included a discussion about BYD in a Tesla note. In general, they're not really saying a lot here. Investors are paying closer attention to BYD because obviously this quarter they happen to have higher sales or deliveries this particular quarter. So they're just saying here that BYD, notes that BYD achieved its 3 million unit target for 2023 on the back of ongoing promotion campaigns and solid overseas sales. And then the question is, are they going to be able to continue these discounts that they've been doing as they move forward? They also expect that the recent lithium price declines that could be allowing BYD to continue these aggressive promotions into 2024. They do say, though, that they do think that it's going to be hard for BYD to expand beyond China because as they enter into Western Europe and they try to get in the United States, there's going to be tariffs, trade protectionism that might potentially stop that. But if they then partner and actually create joint ventures into Mexico, for example, in other areas, and that's how they're going to be able to do it. Again, not sure why they put this note. Didn't really say much, but that was my interpretation. What's your thoughts?
Well, I have a lot to say on BYD because I've been studying BYD for some time. BYD is a really interesting company. It's a great company, actually, but their margins are extremely tight, and they're going to be tighter in this last quarter. If you compare BYD to Tesla, the natural analyst and the markets, or certainly the journalists focus on unit numbers. But if you look at dollars, from a dollar perspective, Tesla far, far outsells BYD by a significant amount. And if you look at growth, Tesla's growth over the last 10 years, and certainly over the last 6 as well, has far exceeded that of BYD, even though BYD's unit growth in the last 2 years has been very impressive. So there's a lot to say about the comparison of Tesla to BYD. But what he is saying here, what is very important about what is being said, is where the future lies in terms of the European market and the American market and the other international markets for the Chinese manufacturers, and in particular BYD. It's going to be more difficult, just as it's been very difficult for international companies to come to China. Now, Tesla's an exception. And that exception was made by the Chinese government because they understood Tesla's role as the catalyst for this new energy market, this new energy vehicle. And they played that role. Tesla played that role to the Chinese delight. Now the moment, now where do we go from that moment of the Tesla catalyst role? So it's very interesting. BYD's role in the international markets needs to be facilitated by international partners. Whether that partner could or would be Tesla is an open question. I think it would be a really good partnership, but a complicated partnership. So we'll see how this plays out.
Wow. I mean, interesting. That's the first time I heard here potential partnership between BYD. Now, of course, Tesla already has a partnership with BYD. They're buying their
Yes.
batteries from them. Are you suggesting that there might be even something more than that? That's
Yes,
the
I
first time
think a
hearing this.
partnership in a battery factory would be a really appropriate partnership. And that would lead to other areas of partnership, in particular technology exchange. Look, BYD employs 600,000 people, 3 times as many people as Tesla to make roughly the same number of battery EVs. They make quite a lot of, other new energy cars. I think those are going to go away. Certainly in China, those numbers are dropping precipitously. But yeah, I think that Tesla could bring a lot of technology to BYD, and BYD could bring a lot to the table with Tesla.
Very interesting. I like you, Larry. You're very different thinking. First, I heard it here. We'll see what happens in the future because everybody seems to think default BYD is a competitor to Tesla. We don't see them as a competitor. The competitor is ICE gas cars. The market is so wide open. They can make every single sale they ever make. We will make every single sale Tesla ever makes, every production car they make. But there's a potential that two would partner. That would be killer.
Well, in the industry I come from, in the software world, we talk about competition. So many companies cooperate with one another and compete with one another. And I think that it's an area of real possibility. The fact that, right now Tesla is using BYD batteries is a really good indication of the areas of potential, competition, cooperation.
Okay. So the big point that Morgan Stanley wanted to make was this thing, they called it Electric Katan. So that's the Settlers of Katan. It's a game where, in the part of the game, I just played it with my daughters this week twice, where, your goal is to conquer the world and then to be able to go from one country to the other country. So they're basically saying here that, Elon's been traveling, meeting with all these, these partnerships across the country, these world leaders, and they need to do that because they need to establish gigafactories and they need to establish, guarantee the supply of battery minerals outside there. And outside of China, we struggle to see anyone else outside of the Chinese auto market who can compete with Tesla at this stage. Who else is going around, going world, country by country out there? And of course, Tesla is very critical to establish a relationship with China, which is what they've done. But they're moving on. And so, Elon did meet with Italian officials, Prime Minister Meloni. And then there's just a question of what does that mean? Is there a potential investment happening in Italy? So this is their chart that they showed. This is the world, of course, and everything that's blue, that's where Tesla has an existing Tesla Gigafactory. America, you got the Berlin here, and then you've got China, and soon to be Mexico. But you see all the red. That's where, Morgan Stanley's saying that Tesla's going to be possibly partnering with all these other countries here as we see all these little red areas. Any thoughts on that topic?
Yeah, I mean, it's very clear we've already, called for the possibility of India. I think Australia is a really interesting country. I would need to do the analysis of what the megapack opportunity in Australia is, whether that's sufficiently served by China. China, has the ability to absorb all of the megapack production of the potential of the planned factory in China. So, Australia is really an interesting country, and the volumes are relatively small, but the actual interest in the product is very, very high. And then, there's a whole question about South America. So, yeah, the world's Tesla's oyster. I mean, Tesla's done a fantastic job of opening markets for, EVs. And now it's a matter of, the energy business and expanding as well. So I think he's right. I think there are, enormous opportunities.
Okay. And then the other table that they showed was this one. So reminder that the price target for Morgan Stanley for Tesla is $380. So of that price target, when you do a discounted cash flow, they're saying that $86 of that price target is based on the auto business. $48 or 12.6% is on energy. So I talked about this a little bit. That's fantastic that his is a analyst, institutional analyst that's actually giving credit to energy, and that's a significant amount. Then you got the green, which is insurance. You got mobility, ride sharing. So they actually are pricing in robotaxi or some sort of FSD, and then network services. And I'm not sure what that specifics what that is exactly. And then of course there's that partnership there. You've been talking about some sort of electric vehicle powertrain with a third party. They've got that built in as well.
Yeah, and we've been talking about partnerships in powertrain for some time. Not just in powertrain, we think there are other areas of partnerships as well, including charging and including the 48-volt system. The one thing missing in the sum of the parts valuation, the one glaring thing missing, is the biggest one of all. Optimus.
No, but of course, yes.
I mean, Optimus could well be the biggest part of this whole pie. So, for us who understand what's going on in Tesla and who recognize the opportunity a little bit before analysts are prepared to, see it as a material opportunity, this is just like last year, like a year ago's thinking or 2 years ago thinking. And so I think the opportunity is huge. And it's larger than indicated here. This is great in terms of the components mentioned. It's just missing Optimus.
Yeah. So I just checked up. Morgan Stanley calls Dojo as a service, software as a service. That's what they call network services. So that's a huge amount, 30% of the stock valuation. Now, this is within 1 year. So this is actually funny because, like you said, if they're thinking Dojo service, if they're thinking and I know you've been calling for this, some sort of software a partnership with the EV powertrain and maybe others happening sooner. But right, if surprisingly, is Dojo service going to show up for bots? Interesting. So they don't include that quite yet.
I doubt it, but I'm not sure this is a 1 year forecast. I think this is the longer term forecast. We can check on that, but I think that. Pardon?
It's the 380. It's the 380 price target, and the price target is usually 1 year.
Interesting. I think that the network services and in particular the training services are more than a year away, or if it's a year away, it would just be the introduction and some of the market testing and so on and so forth. I think if we look at the Tesla plan for Dojo, or let's say training services, because I think Dojo is just a part of that, it looks like we'll hit 1 exaflop in about October of this year. And I think, where Tesla is on that is that they're going to be absorbing most of that for FSD and Dojo. So if they are absorbing all of that, and typically these things are a little bit later than projected, I don't think we're going to see revenue from this area in this year, but we will definitely see products being announced in terms of services and so on and so forth. So yeah, I think that this is one of the most exciting parts of Tesla, but I mean, there's so many exciting parts of Tesla. People, and the interesting thing is that Tesla has the breadth of management to manage these offerings, which is quite amazing given their low level of operating costs. So we'll see.
Yep, and they're all coming to fruition, and they're all going to become line items under revenue within a couple of years, maybe. Yeah, we're just debating whether it's next year, 2 years, 3 years, but certainly 4 or 5 years from now, every single one of these. Energy, of course, is there already. Bots will show some sort of revenue line. AI as a service will show a revenue line. Robotaxi, if it's not just FSD, uptake will be significant. Insurance. Okay.
So honestly, Herbert, I don't think we're talking 3 or 4 years. I think by the
I
end
know.
of next
Just-
year, we will see all of these lines well established.
End of next year. Yeah, end of 2025 to 2 years from now. I agree. Thank you so much, Larry. That was a good covering of Morgan Stanley's note. Appreciate you. Follow him on X at Tesla Larry. Thanks, everybody. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.